Welcome back, investors, to the Investing with Our YouTube channel for another video. If you're new to the channel, I am a UK-based investor focusing mainly on US stocks, and I started the portfolio I will be showing you today in April 2021. I am fortunate enough to have gone past the golden milestone having a 100k portfolio, and I'll be showing you the ups and possibly more importantly the downs of my investing journey. This includes the buys, the sales, and the dividend income I receive. So if you're a returning viewer, smash that like button. If you're new to the channel, subscribe so you can follow my journey. Now, let's get into it. This week's video is going to be summarizing the fourth week of October. So at the end of last week, we were at £133,292. And this week we ended on £137,399 for a very solid week, up £4,106 for a 3% return. Now, if we look at the week, it was generally going up, but then there was, I'm not sure actually, so there wasn't a particular news event that triggered this, but there was a big sell-off in the middle of the week, which allowed people to have a chance to buy the dip, as it were. And then the reason why it ended so well was this mainly. US inflation hits 3% for the first time since January. So even though it was up from 2.9% in the prior month, most analysts had forecast a 3.1% inflation rate. So that meant the market went higher, as you saw from here, and it ended a solid week. Now, on top of that, if we look at the CME FedWatch tool, you can see that there is a 98% chance that there will be another rate cut on the Fed meeting, which is going to be happening on Wednesday. There is also a 90% chance that there's going to be a cut to another 25 basis points in December. So with those two things in mind, it seems like the market is going to continue to push on and share prices will potentially go higher. So things are looking very good. Things are looking bullish. If we add net deposits here, I'm getting close to investing the £100,000 mark. And the portfolio is up, if you look at the last year, is up £25,000. So things are going really, really well. If you look at the max, we're up just under 93% now in terms of rate of return, getting close to £40,000. Now, on the right-hand side, you can see this is my pie. I know that quite a few people copied my pie, probably about 80 of you. So if you were invested from October last year, you'd be up 25%. If you see how that compares to the S&P 500 for the last year, then it's up 16.63%. So we're beating the market by almost 10% here. So if you were a copy of my pie, well done on that. If you have a quick look at the holdings, this is what it looks like. So there's a decent amount of stability and risk. This is a pie that certain members of my family copies, so it's something that I'm happy for it to be out there. So we've got 10% in Google and Microsoft, 8% in both Meta and Nvidia, Amazon, Broadcom, MasterCard, and Visa, all at 7%. Costco, KLA, Robinhood, Tesla at 5%, ASMR at 4%, and then the last few at 3%, which are Apple, Centrica, Imperial Brands, and United Health. And if you look, all of the positions are up. So the pie is going really, really well. So going back to the portfolio, up 3%. So as you would expect, a lot of companies have done well this week. If we look, and I think this has really helped me actually, tracking these weekly results for certain companies. I can see which companies are taking breathers, which ones are doing really, really well. If you discount week 2, where the Trump tariffs with China caused huge instability within the market, you can see some of these companies are doing fantastically well, especially the semiconductors. So you've got ASML, KLA, which is up every single week, barring those. Nvidia, even Apple has done really, really well, which is a company that's been struggling for the last year or so. But here we look at overall, no company performed spectacularly well, but across the board, there were only 4 down positions, but no company above 1.5% here. And if we're looking at the best performers, we have Robinhood at 7.5%, KL at 6.68%, Carnival at 6.48%. So really, really solid week. And there's a potential for it to continue next week, as rate cuts are very likely to happen as well. Now, I do make videos once a week. Anything more will be quite time consuming, as these videos do take a while to make. But I do make more regular comments on my portfolio and also my general views on certain stocks, especially my buys and sells that I'm going to be doing. I am going to be mentioning them on Substack. So if you can, join over there for more regular updates. You can scan the QR code if you're watching on a laptop or TV, or you can go straight using this link. I will link it down in the description below. And also, if you've enjoyed my content so far, if you've gained some benefit from it, please give it a quick like, subscribe to follow the journey, and hit that bell icon so you're notified when I make a new video. Now, if we look at the overall positions, we can see my biggest position, which was Google, hit an all-time high of $260, something I'm really, really happy about. So I own 86 shares, which I trimmed from about just over 100. But one of the reasons I did that was that the overall holding was about almost 18% of my portfolio, which for me is too big. I'm liking the fact that it's about 12.2% right now. This is a good size. So I'm happy about that. I think what I'm going to be doing is, after the second rate cut, give the portfolio a bit of time. Let's see how it does. And then I'm going to trim a little bit because there potentially could be a pullback. And I want to have a bit more cash available so I can deploy when there are dips, just like there were this week. I mean, if I had a bit more money, I would have bought a bit more. But there's only so much cash that I have available. Second is Robinhood, which had a great week. As you saw earlier, up 7.5%. And I have 110 shares for an average cost of $109. It's back at just under $140. So a position or a company that I'm very bullish in. I think it's going to be a very dominant brokerage going forward. And I'm happy for it to be second biggest within my portfolio. Third is Imperial Brands, up 67%. Meta, up just under 27%. And now a lot of these companies are going to be reporting earnings. The first batch of earnings have been quite positive for certain companies. So it's hoped that a lot of these other companies are going to follow well. This could trigger a very good end of year rally. Now, two companies that are the backbone of my portfolio, Visa and MasterCard. Their competitor, American Express, had some good results. So we're hoping that Visa and MasterCard both show good results as well, especially with consumer spending data showing that people are spending quite a lot, and Visa and MasterCard usually are beneficiaries of that. So that's good. Microsoft, let's have a quick look. A decent year, up just under 23% at $524 a share. And I have just under 18 shares right here for an average price of $368. So performing well too. Carnival, up just over 95% for a 3.2k gain. Nvidia, up 70% for a 2.6k gain. Tesla, which had lukewarm earnings. Vehicle sales came in quite solid at just under 500,000, but that was with the inclusion of tax credits, but they're going to disappear. So going forward, this is a position that I will be monitoring to see if I want to trim some of these profits, which are just over £3,000 at the moment. And when it comes to trimming, this might be one of the first areas that I look at. Oscar Health, up just under 19% for a £946 gain. Broadcom, up almost 85% for a 2.6k gain. IREN, which had a very good end of the week, as you can see. It had a really strong rally from about $50 all the way up to $63 at the end of the week. And this is a company that I'm bullish on. And one of the main reasons is that a lot of these AI companies need a lot of compute, and IREN, amongst other things, has that in terms of its data centers. So this is one that's I think would go up. Bitmine, now I've had a few comments from certain people messaging me about this, and all I would say is just hold on. With rate cuts, you're going to see a lot more influx into crypto, specifically Bitcoin and Ethereum, which Bitmine is a big holder of, and just give it a bit of time and you will see this one will go up too. United Health, up just under 5% for a £231 gain. Grab, slight loss, but they're due to report earnings next week as well. Hopefully that's going to be a positive one, which signs are suggesting that it will be. And this is a company that I'm keen to see how it does. Amazon next. People are saying this is the next Mag 7 that is due to break out because it's the worst performing one so far this year. And it has very strong fundamentals. It's got quite a big weighting within my pie, just hoping for this breakout to occur. And let's see how earnings do for that. Him down just under 15%. They have earnings next week as well. Now, this is one, if you watch my videos, this is one I'm monitoring because I think the management, although they've done really well up to this point, showed incredible execution. This is now the time where they start becoming noticed. As you can see from the revenue, it's 1.48 billion for the last year. Now, the market is going to be pushing for it to get closer to 2 billion in revenue. And this is when it starts to get a little bit tougher. Doesn't help the share price that there's so much short activity of this company, but it is what it is. But this is one I'm going to be monitoring. I did say from the last earnings that I'm going to give them at least one more earning. So let's see how they do. There's been a lot of insider selling, which is not good for the company's optics. And management needs to be aware of that investors do get a bit spooked when there's so much of it. I saw a post where there was quite a lot of insider sales, which it's a slight bit of concern. But let's see how their earnings do, because fundamentally that is what it boils down to, how much money they're going to be making and how well their products do in terms of sales. So let's see. Centrica up 61%. A big shout out to this company, actually. I don't have many UK stocks within my portfolio, but this is one that has been, if we look at the history of this, I first started buying this in 2022, and I've continued to add to this position just because, as I mentioned, I monitor my portfolio regularly just to see if companies are performing, and this one has stood the test of time. It's a decent dividend payer. If we look at 2.69%, it was a bit bigger before, but as the share price grew, the dividend yield goes down. So it pays me a decent dividend, and also the share price in the last year at 45.48%. And if we look from about 2020, the average share price then was about 70 pence, and now it's at £1.79. So a really, really solid performer. So I thought I'd give that a shout out. Costco up almost 16.5% for a £325 gain. Apple really bucking up its ideas, especially in the last quarter. Look, it's up almost 23%, and it's trading at $263. It spent a lot of time under $200, as you can see over here, and that's when I started trimming. But now it's starting to recover again, so it might be something that I look at adding. Don't think so, but my point is, if a company starts proving its worth again, then you have to look at considering it again. ASML up 24% for £163 gain. And KLA, I have to give a good shout out to this company, even though it's such a small position of mine, up 75% for the year, and really solid trajectory in the last 3 months as well, up just over 30%. I did a video just over a year ago about the top semiconductor companies, and the reason why I have these two is they performed so well in that benchmark study that I wanted to add £500 in each. And as you can see, those two £500 have moved up to just under £850 each. So that's it. That's the portfolio, £137,399. Really, really happy. Really excited to see how the end of the year goes, actually, as a lot of people are predicting that the market is going to go up. And I'm here for it. So thank you very much for watching this video, and I'll see you on the next one.